Unit 6, the journal. Unit 6 is all about the journal. When students finish this unit, they will have the skills necessary to explain the purpose of a journal. They'll be able to demonstrate the skills necessary to record transactions in a journal for a service company. This is a very short unit. There will be 2 classes learning about journals, followed up by the Unit 6 test. The definition of a journal is that it's a record of transactions recorded in chronological order. It's very important that you have in your definition reference to the word chronological order. What is chronological order? It is order according to time. It's a list of items by date or the order in which they took place. One of the benefits of a journal is that the journal records all parts of a transaction in one place. You don't have to look for one account to find the debit entry and look up another account for the credit entry. Everything is in one place. The date, the debit, the credit, and the explanation are all in this journal entry. Sometimes it's called a general journal because later on we have other types of journals that we have to talk about, but that's not until Accounting 12. Each transaction is recorded in a journal and it's called an entry. Journalizing is the process of recording journal entries. There are 4 parts to every journal entry: the date, the account debited and the amount of that account debited, the account credited and that amount, and please note, the credit account is indented so that it shows as being different from the account that is debited. So when you're looking at a journal entry, you'll notice that the debit amount is right up to the left margin, but the credit amount is indented. And I'll show you an example of that later. The 4th part of a journal entry is an explanation of what happened in the transaction, the details. Here are some examples of transactions where we will learn about how to do the journal entries. October 1st, October 3rd, and October 5th. On October 1st, services were sold to R. Hino for $900 cash and sales slip number 1 was provided. On the 3rd, $400 was paid to the Gazette for a newspaper ad and it was paid with check 1. On the 5th, the secretary's salary was paid. $700 was paid with check number 2. Normally what happens is that if we use the T account format, the cash account is debited $900 and the sales account is credited $900. And that's what we've been doing up until now. Using the journal, this transaction would be recorded as follows. So you can see we have the year of the date, we have the month of the date, and we have the day of the date. The name of the account that is debited is cash, and then we put the amount under the debit column. Notice the debit column. Notice the indent here for the amount, the account that is credited. This is sales. Sales are credited $900. And then we have the description. Sold services to R. Hino for cash, and then if there's any details about sales slips or check numbers, we have to indicate them here in this explanation. The second transaction on the 3rd. Advertising expense is the debit account, and the amount is $400. The credit account is cash, and under the credit column we have $400. The description is, paid the Gazette for a newspaper ad with check number 1. Make sure you put any details regarding checks or sales slips. The third transaction, on the 5th, involves salaries expense, $700 in the debit column, indented for the credit account, which is cash, $700 in the credit column. Paid the secretary's salary with check number 2. Let's take a look at the steps involved in recording journal entries. First of all, you record the date, as I just explained. The first entry must show the day, the month, and the year. For the rest of the page, only the day is required, unless the month changes, and then we will record the month. Step 2. Record the debit account. The name of the account must be exactly the same as it appears in the general ledger. The amount is recorded in the debit column. Step 3. Record the credit. Record the information on the next line. So we have to have the credit account to distinguish it from the debit easily, and it is indented. Record the amount in the credit column. Step 4 is to record the explanation. Make sure you describe the transaction in as much detail as possible. Be sure to include invoice numbers, check numbers, and so on. So why would we even want to prepare a journal? What are the advantages? Well, for one thing, as I said at the beginning, the complete transaction is recorded in one place. We don't have to go hunting for certain accounts and look to see what the debit amount is or the credit amount is in a different account. This helps to reduce errors. Everything is in one place. It represents a chronological history of all the business transactions. That means they happen according to time, the order in which they took place. So if you have to go back in time to find out the details about a transaction, it's easy to find. You can just look by the date. It makes it possible to determine the daily, weekly, or monthly volume of business and identify busy periods or slow periods a lot easier. It provides a convenient picture of each day's business. So we can go back in time, check out a certain date, and see everything that happened for that day and find out if it was a good day or a slow day. Double entry accounting continues to apply in the journal, as you saw. For every transaction, there's a debit entry and a credit entry, and the two amounts are equal. There can be more than two accounts depending on the type of transaction. Your assignment today is to complete questions 1 to 8 on the web page, on our blog, and those questions can also be found on page 112 of your textbook, and complete the exercises in your workbook, exercises 1 to 3.